One topic you may have heard about in recent months is that of companies buying Bitcoin to add to their treasury. But why are companies adding Bitcoin to their treasury? And how are they doing it? Well, we'll explain it all in this latest episode of Your Crypto Capsule Explainer series. Hope you're ready, because here we go. This episode of my Crypto Capsule Explainer series is brought to you by Econex. Econex is a NASDAQ-listed institutional-grade exchange built to provide the best crypto trading experience for traders and long-term investors. Start trading today on Econex and buy Bitcoin and other cryptocurrencies with US dollars. Best of all, you can receive rewards for each of your trades. Sign up today and get a welcome bonus. The role of treasury in any large company is to manage the firm's cash and other assets to ensure it has the money to manage its day-to-day obligations, from paying salaries to buy required goods, while also helping develop its longer-term financial strategy and policies. What has been incredible is to watch many companies start to hold Bitcoin and other crypto assets as part of their treasury. But why are they doing so? And how? Well, let's go step by step. First, when trying to analyze this topic, it is important to separate between crypto companies and non-crypto companies. Let's start with the crypto companies. It's perhaps not surprising to see crypto companies add Bitcoin as part of their balance sheet. These are firms that are involved in crypto, so one would expect it is normal for them to also hold Bitcoin as part of their treasury. For example, crypto exchange Coinbase mentioned how they hold Bitcoin in their treasury as part of their public filings. Many other crypto companies like Chainalysis, for example, which does crypto compliance, announced that they are now holding Bitcoin as part of their balance sheet. There are also other companies that are somewhat related to crypto that have Bitcoin as an important part of their strategy. A good example is the mobile payment company Square, which first announced it had purchased over 4,000 Bitcoins in October 2020. The press release that accompanied Square's first Bitcoin purchase went so far as to say that the company viewed crypto as an investment for economic empowerment. But what is the most interesting is to see companies that are not involved in crypto buy Bitcoin as part of their treasury. A good example is electric car maker Tesla. In February 2021, the New York-listed Tesla announced that it had bought $1.5 billion of Bitcoin. These 43,000 Bitcoin are worth over $2.5 billion as of Q4 2021. Another example is Asian gaming giant Nexon, which is listed on the Tokyo Stock Exchange, in which cited its $100 million purchase of the digital asset earlier this year as part of a disciplined strategy for protecting shareholder value and for maintaining the purchasing power of their cash assets. And let's not forget Asian tech company Meitu, which is listed in Hong Kong and which bought $40 million of Bitcoin in early 2021 and even mentioned in the press release that they were buying Bitcoin because cryptocurrencies provide diversification to holding cash. The reality is there are many more companies that are buying Bitcoin as part of the treasury, but the reality is that only public companies need to make such disclosures public, and thus why we know about them and can talk about them publicly. But the big question is, why are these companies all holding Bitcoin? The most common answer is that these firms are worried about the risk of inflation, hyperinflation, and currency devaluation following the record levels of quantitative easing that we have seen in recent months, especially from the COVID-19 global pandemic. These firms deem it prudent and to a certain extent as part of their fiduciary duty to put a portion of their cash holdings or diversified portfolio in Bitcoin to hedge against such risk. Time will tell if we experience such a major inflationary event over the coming months. But if we look at history, such inflationary and hyperinflationary events have happened over and over again. It even happened when people were using primitive forms of money, like cowrie shells, for example. Cowrie shells were used for centuries across Africa. As they would originate from the Maldives, their supply was limited. But then Europeans started bringing shiploads full of cowries, which caused hyperinflation. It has also happened when empires started to issue their own currency. For example, the Roman Emperor Nero, as of 64 AD, thinking nobody would notice, started debasing the denarius, the currency at a time, but reducing the amount of silver and gold in their coins. This gradually led to the collapse of the Roman Empire. It happened to the Chinese in the 12th century, who had by then invented paper notes, when the overprinting of money from Emperor Kublai Khan who led to rampant inflation and the collapse of the Khan dynasty. It happened to Spain and Portugal in the 16th and 17th century, when the record levels of gold and silver brought from America resulted in rampant inflation. For example, between 1500 and 1600, it is estimated that prices in Spain rose by 400%. It also happened with some of the modern empires as well. During the French Revolution in the 1790s, the French simply printed more money as they needed to fund the war and their various initiatives. Inflation was so rampant that the price of ink that would be used to print the banknotes was worth more than the value of the banknotes themselves. It happened in the US in the 18th century. In 1775, the US Congress would issue the Continental to finance the American Revolutionary War against Great Britain. However, it would soon lose its value, thus the American expression, not worth the Continental, and Congress would stop issuing it around 1780. And it would happen dozens of times in more recent history. The 20th century alone has over 50 episodes of hyperinflation from post-war Germany or Hungary to more recent cases in Venezuela or Zimbabwe. While many previous cases of hyperinflation in history were linked to physical war, where countries would print money to pay for the war effort, many will argue that this is not too dissimilar to what we're seeing today, with the exception that we're trying to fight the global virus rather than a specific country. The argument of many of these firms buying Bitcoin is that due to these unprecedented levels of quantitative easing, the prudent thing to do is to hold some Bitcoin as part of the diversified basket of currencies and assets to hedge against such a potential risk. This is in addition to other reasons such firms may have of being optimistic on the future of Bitcoin and its price, from the increasing adoption globally to increased regulations. However, while this may be a prudent move, there are always risks involved. For example, Bitcoin is still a very volatile asset. So any company adding Bitcoin to their treasury needs to be comfortable with that. Bitcoin is also a new asset, and many executives, especially some of the more, let's say, traditional or experienced ones, will not necessarily be familiar with it. So education is needed to ensure they understand the asset and can be comfortable with it. There are regulatory considerations as well in some countries. In China, for example, buying Bitcoin is simply not allowed. Also, there are tax and accounting considerations as well, from the way Bitcoin is characterized from an accounting perspective to ongoing tax uncertainty in some countries. Ultimately, businesses will need to make their own decision on the pros and cons of adding such an asset to their treasury based on their particular circumstances. But the good news now is that there's definitely possible, and there are many easy ways for them to do so if they decide to move forward, from using crypto brokerage firms to crypto exchanges. One thing is for sure, expect this topic to come up over and over again in the coming months, and don't be surprised to see more and more companies begin holding Bitcoin and other crypto assets as part of their treasury. Hope this was a useful video. If there's any other topic you'd like me to cover in a future explainer video, feel free to let me know in the comments below. See you all soon for another episode of Crypto Capsule Explainer Series. See you all soon.